Hello guys, this is Felipe from the Noob Trader, and in today's video, what I want to discuss is today's CPI report that'll be coming out. I think this is obviously the big data point, the economic news that everybody's waiting for, regardless of what market you're trading in, whether it's stocks, gold, crypto, or whatever. I'm obviously going to talk about it more specifically about gold, but everything I say, I think is going to be kind of connected to all of these markets. Going to quickly discuss what I think potentially will happen and what it kind of means for the price of gold, and also touch a little bit as well on what I think it potentially means for the price action in overall crypto markets. Okay, so let's get started. So yeah, as I said, today it's the big CPI report. We have the core CPI report and just the CPI year on year. Again, if you don't know what this is, it's basically an inflation measure. And as we all know, inflation is sky high right now. And the expectation really is, or in terms of forecast, is that, um, yeah, it's going to continue to grow. And I think generally that's what people are expecting. Okay, so just given the overall narrative right now that's going on in the market as well, everybody's really concerned about interest rates at the moment. Although I feel as though people who are in the gold market or in the stock market are a little more accustomed to this news. Like the crypto market just took the FOMC minutes from last week, like really badly. I was kind of surprised, which probably just shows you the immaturity of the market. Gold investors, people are involved in the stock market are probably a little more aware. Therefore, there wasn't nearly as much volatility, I feel, um, or as much of a strong reaction. Because as we all know, Powell's been kind of laying the groundwork for all this interest rate hike bullshit. Okay. And that's how he operates. Okay, so I think what we can probably expect from the CPI is that we're probably going to meet forecasts, or if not exceed it again. I mean, this is what we've been seeing over the last, you know, I don't know how many months at this point. We've been seeing this, which is totally in line now with the narrative, right? Now even Powell's saying, right, based on even the press conference that he had yesterday, or the hearing, that yeah, inflation is high and the economy is ready for monetary policy tightening. Blah 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 bullshit, right? So clearly, I mean, even he's expecting it, and I don't think really the price action that may come out of the CPI report is going to be based on the fact that, CPI is, higher than forecast or meeting forecast. I'd be very surprised if it's lower than the forecast. But even then, in general, the reality is that inflation is extremely high right now, and that's not changing anytime soon, regardless of this CPI report. So I think the larger question that we want to ask ourselves in terms of determining overall price action and reaction to the reaction of the market to the CPI report that does come out is how how much has the market already, basically consumed the interest rate narrative now? Like how accustomed are they to it now? Because at this point, if the market is still very, very hesitant based on the interest rate hike potential that's coming next year, which again, as we've discussed on this channel before, is total BS, right? I mean, it's not much of a hike whatsoever. But if the market still hasn't fully digested the news, then, for example, a CPI report that hits, quite a bit higher in terms of percentage points could really, really spook the market, right? Whereas if the market's already fully digested the news, everybody's kind of aware. Everybody's also come to the realization like, hey, this is really not that big of a deal. Like monetary policy is still super, super loose. Okay. There's nothing that they're really tightening. Raising the interest rate by 0.25% each time, 3 times over the next year is not much. Okay. Um, if the market, is kind of fully digested this news, then maybe there won't be that much volatility whatsoever. Or in fact, they're just going to take the high inflation number and then just make it, or basically what it could lead to is just price going up, right? For example, in terms of gold, just because people realize that, hey, like this tightening is just kind of a bunch of BS. And, there's no reason to get, wary or fearful during these times. Okay. I think from a technical standpoint, however, we do have to keep some things in mind, right? If we're expecting that the CPI report is going to be, forecast meet forecast, which is high, or exceed forecast, which is going to be even higher. We do have to realize that the reality is that in terms of the gold market, we've really struggled to get past 1830 for I don't know how many months now. I mean, basically all the way since back May. We got over it one time, and we pretty much got instant rejected, right? It's clear that there's like on the longer term time frames, also on the weekly chart, that there is a price wedge forming here. See eventually when we're going to start breaking out of it, but I would I would be surprised that we're going to break through this 1830 barrier, or even meet this potential, or get past this wedge here at the top end, based off a CPI report today. Probably what the market's really waiting for is the potential first interest rate hike in the next few months to see if we're going to go, down or up. That's what I'm kind of expecting. So we do have to take into consideration, right, that you can't just bet necessarily on the fact that, okay, the CPI report is going to be high, people have digested the news, and therefore price is just going to shoot up. No, because also from a technical standpoint, just from a supply and demand standpoint, at the moment, we're on the higher end, okay? What I've said for the longest of time is that 1750 and below is great price for gold over the last few months, and I think this is just proven to be true when you look at, recent price action. Okay, so we do have to take that into consideration. Meanwhile, when we look at the dollar, which is obviously going to continue to potentially rise as this interest rate hike narrative continues to build and build, and inflation is currently showing higher and higher numbers, we do have to realize that the dollar has pulled back also quite a bit, and now we're also reaching a point where previous resistance now may become support. Okay, so we got rejected where we drew the range before. Now we're pulling back, so we could potentially expect the dollar to start going back upwards soon as well. So we have to it's not just about taking the fundamentals into consideration. I do believe fundamentals drive the market, especially when you're talking about gold and these kind of economic markets, but also we have to take into consideration technicals as well. One other thing that I do want to highly point out as well is the 10-year yields. As we all know, there seems to be a pretty strong correlation between gold price and 10-year yields. With the interest rate talk, et cetera, going on, we have seen a pretty strong rebound, right, overall in terms of the 10-year Treasury yields chart. Okay. Um, it looks like we're probably going to eventually break through this general area of, let me draw actually the triangle out here. Or sorry, not the triangle, the rectangle out here. Okay, that's really terrible drawing there, but you get the idea. Just let's say around here. We're probably going to break through this general resistance range at some point, just given where the narrative of the market. Obviously, this is something that, especially when we look at the gold market, we're gonna have to really monitor, um, just because, the correlation is there. We all know this. If you've looked at the gold market for any amount of time, we all know this, right? We're probably gonna go to 2% soon. What does that mean? What does it mean if we break over 2% in terms of the price of gold? I'm not really sure, just because also inflation is so high. Again, the monetary policy is just generally bullshit. So we have to see when the market's really going to fully digest. And then, interest rate hikes won't really affect the market too much. We're going to have to wait and see. But it's something that we definitely want to monitor. Okay, guys. The last thing that I'll say about the overall the CPI report coming out, and what it could do for prices, I do want to quickly touch on the crypto market. So the crypto market has seen a slight bounce in the last, yeah, I'm looking at the weekly chart now, in the last day or so, or in the last couple of days or so. So we'll have to see how it reacts. I expect the CPI report to be, again, forecast or higher than expectations. And just given how the market reacted the last time the FOMC minutes came out, I would probably suspect that in the crypto market, we're probably going to see potentially further downside with a bad inflation report, just because it's going to spook the more immature investors here even more. Plus, the market's so extremely leveraged at this point, so it's something that we do have to consider. Um, But again, the question here for the crypto market too is like when are the investors or the traders going to realize that this is all just kind of a bunch of bullshit? When is when is the interest rate hike narrative going to be fully digested by this market? I'm not really sure. Um, but let's see how it reacts. I could be totally wrong. I was just quite surprised by the reaction by the FOMC minutes. So, this is a market that's really controlled by narrative, probably more than any other market. So I think we really have to see how it's going to react and then just kind of take it from there. Okay. Anyways, that's all I have to say, guys. Hope I covered everything necessary about the CPI report. If you have any questions, please leave a comment. If you like my analysis, please consider giving a thumbs up, and I'll see you in the next video. Take care, guys.